Hey everyone, this is Teddy from thefinancialbulls.com. Check out the website. It's a great website. You'll learn a lot. And this is the market recap video for the past 2 weeks, along with some setups for the next 2 weeks. So, to look at the overall market first, it's been 10 trading days since the last video, and that was around this area right here. It was the 26th of September. And basically during that time, there was just pretty much a consolidation zone. It wasn't a sharp retracement. It was just everybody was thinking, well, will the market continue to make new highs from here, or will there be a steeper sell-off, possibly a correction? And so far, we have gotten our answer the past 2 weeks. It has been a ridiculous amount of volatility. As you can see, we've pulled back from that previous video from 1982 down to 1906, so pretty sharp sell-off. And the bulk of it has happened within the past 2 trading days, actually, which is pretty interesting. As you can see, these huge wide range bars, that is very concerning. Most of the time, we like to see in uptrends low volume, shallow pullbacks. But when you have this violent action, like you see right here, that's a signal that we're in trouble. So I'm not calling a top. I don't think that's how you make money, by calling tops and bottoms on huge uptrends and downtrends. But what I am saying is this does not look good. And as you can see, our key indicator here, what I use, is the 21 period exponential moving average, and that has been king for trading this retracement. As you can see, this retracement, sorry, I can't say that. The retracement has pretty much been governed by the 21 period moving average. Right here, it's rallied back into it and got sold off. It tried to overtake that moving average again and then got sold off as well. So as long as we're below that 21, I think we should have a short bias. I see some long setups too, and I think we have an equal amount of longs and shorts. But for the time being, I would be skeptical of the overall market. But generally, in my positions, I like to have one short and one long to remain as market neutral as I can be. In reality, nobody can be completely market neutral. It's almost impossible. But that's what I try to achieve and what I recommend for anybody watching this video. So as you can see, the 21 period moving average has stopped each one of those possible rallies. And now the market is sitting at key support right here, around 1900, let's say, 1900 even. And sorry, get rid of that. And given that an uptrend is characterized by higher highs and higher lows, if we break this prior low at 1900, that would mean that we're in serious trouble then, because that would technically, by textbook standards, violate the uptrend. And this uptrend has been huge. It's gone on for, let's just say, it's gone on since 2009. Higher highs and higher lows, pretty much like right here, we violated the pivot low. Okay, so let's say from the beginning of 2013, we've had higher highs and higher lows, and now we have the possibility of breaking through this prior low and possibly foreshadowing a steeper correction or maybe even a downtrend. I don't really know. We just got to be really tactical with our positions in the meantime. If I take away this short-term support line on the daily, as you can see, that's the short-term chart. So going back to the weekly again, you can see that the blue line, let me delete this. That blue line has provided support for the market, this on a weekly basis, almost every single time since the beginning of 2013. And this is the first weekly close, last week, the first weekly close below that 21 period moving average. So another sign that the market may just simply be running out of juice. It's gone up for a long time. From here, from the beginning of 2013, around 1300, now it's at 2000. Most likely, we could see an oversold bounce this week, or we could continue to break below this 1900 and then rally back and then continue a downward trend, maybe rally back into the 21. But as of right now, the market's not very clear. I mean, I would say short term it's going down, but my guess is as good as a bull's guess right now. You really just have to wait and just do what the market tells us to do. Right now, the market is telling us that we should be a little bit nervous because it hasn't done this in over a year and a half back here, almost 2 years pretty much. So we got to be extra careful if we're going long. And if we're going short, we don't want to get caught in an oversold bounce. So personally, I would take a long and a short position. But overall, we should be careful about where the market is headed. Just make sure to take calculated risk, use stop losses, define your entries and exits, and you'll be fine. It's all part of the market. Nothing new is happening here. It's just part of the game. So to review our past setups, we can see BRCD. Let's go back to the daily charts. So pretty much most of my long setups that I picked were winners in the early first few days of their breakouts or pullbacks, and then they started to fall over. So as you can see right here, this was the day that I said people should be buying, and had a nice rally from 1070 all the way to a high of $11, which was my target given that this right here was the previous high. So if you traded that and took your profits, that's great. If you didn't, I mean, I'm sure if you were trading momentum, you would have realized that once it broke below the 10-period moving average and then the 21 again, you should have gone out. So personally, I'm not going to be responsible for it going from $11 to $9.35. If any of you sat through that, then like, what the hell were you doing? That was not part of it. But if you did, I hope you learned a lesson. Once it goes back into this consolidation zone, that's a signal that it's probably not a strong stock and you should get out. But if you did take your profits around $11, that's great. But wow, that is a pretty vicious decline from $11 to $9.35, just being pummeled with the rest of the market. Twitter, this was another stock. So the 26th, that was, yeah, so we notified it around here. It was above the 21, pulled back a little bit into support from that consolidation zone, as you can see. I mean, not strong support, but just, the stock caught a bid around these levels. And then it rallied hard from $49 all the way to $55. And even if you bought here from 53, the top was 55, so you could get out 54 maybe. And it was performing really well until Friday, and the thing was down 9%. It just got killed. High-flying Momo stocks like this, the market takes a turn. These will take a turn as well, and obviously that's what happened on big volume, as you can see down here. So if you're long, I would recommend getting out. It's below the 21-day moving average, and that's part of the strategy that I use. I like to buy stocks that are rising above their 21, preferably above their 200. Doesn't have to be, but rising above the 21. I like to buy stocks like that, and falling below the 21, sell short stocks that are exhibiting that type of action. And then I could add consolidation zones, or I could just buy dips and short rallies. Things like that, just trading with the trend and holding from anywhere from 2 days to 10 days most of the time, because that's mostly how many days it takes for a swing low or swing high to occur. So Twitter looks awful, as does the rest of the market. So as I said, definitely take some risk off with Twitter. There could be maybe an oversold bounce, but this just does not look like a good chart. Unpredictable. Who knows where this thing's going to go. ISIS, unfortunately, I mean, I guess fortunately because it ended up going downward, but this never triggered for us. I was thinking that if it could bounce off this right here, this 21-period moving average, this was the day. Sorry, right there. And if we could bounce above, maybe get to 42, which would violate this trend line, then maybe we could see some more momentum to the upside. The stock never ended up doing that. ISIS just continued to trend lower along with the retracement in the overall market. RCPT, Receptos. This one was interesting the first 2 days. It broke out. The next day it went from 62, and intraday hit a high of $67. So obviously I'm not saying people should sell out at the 67.30. That's impossible if you can sell at the top like that. But even if you bought at 63 and then ended the day around 65, and it made this nice, bearish hammer right here, that would be a sign that momentum is waning, and that's a sign, I think, to get out. I like to look at hammers and inverted hammers as signs, like right here. When I gave a hammer, and then it rallied for an extra 2 days, stayed above the 10, kept on rallying. And as you know, it did retrace back and broke the 21 on Friday, so that stock isn't looking good anymore. I want to stay away from that. Next is HBI, and depending on how you played this could have been a good performer. We saw right here, and preferably that if it got above this upper trend line, then we could buy right here. And then it pulled back to that support zone, though. And as you can see, that was a very nice support zone, very well defined, it was a descending channel. So if you bought right here, which I like to do, it's higher risk to buy on pullbacks within the consolidation zone of stocks like this that are kind of exhibiting this bull flag type pattern, but high risk, high reward. So if you did do that, and this is the 60-minute chart right now, and bought right here thinking that it could either test this upper band and then pull back, or you could sell this upper band and then it would go toward 110, 111, you ended up making a lot of money. So I'm sure there are people who bought at 105, and eventually the stock hit a high of 112. So it had a nice 4 or 5% run. And this actually did look pretty bullish right here, like it could, go some more. It ended up just falling back below the 21 now, along with the rest of the market. But it all depends, this stock at least, where your entry was. If your entry was here, you could have made good money. If your entry was at the highs of this day, you're out of luck. Maybe you could have gone in for a high of 112, but most likely you would have been stopped out. But that's why you have defined exits, which is really important. You got to focus on protecting your capital, what you have at risk, ahead of how much you can make. Next, we have RL. This stock, Ralph Lauren, I had high hopes for this, but we saw it right here. It consolidated and then had a nice up day off of support, bounced right back into the 21 period moving average right here, had a red day. That was kind of scary. I mean, that was a signal to take some risk off on Ralph Lauren if you bought at 163. Rallied into the 21 day just like the market did, and it sold off ever since. And now it actually had a big down day on Friday, and it broke below this prior support level. So now it's seen as resistance. Technically, it can be seen as a false breakout, which tends to lead toward fast moves downward in the opposite direction of the breakout. So this was once bullish. Now, definitely, I'm bearish on the stock. But not as bearish on JCPenney. And holy crap, I mean, just this is the power of trends right here. As you can see, just all these rallies get sold into, all these rallies. People were thinking this is a bottom. I don't know, it could be a bottom. It may not test the lows down at 494, but it did catch a bid around this prior support, still rallied right back in, almost exactly tick high at the 21 at 1019, and then just got destroyed from 1019 down to $7. I know there's a fundamental reason for it, I forget, something with their orders or whatever, but the price action says it all. If you played sell the rally into the 21, you could have made a killing in only 1 week. That was really bad. And I kind of made a mistake too, because I mean, it was kind of going against my plays to buy right here below the 21, below the 10, as I mentioned. But no trader who would play this type of play with these large swing highs and large swing lows with this volatile stock would ever have to suffer a loss this high and this much of a loss. If you rode this thing from $10 down to $7, just biting your lip the whole time, then that's just terrible trading. If, let's say, you bought it here, it rallied a bit, you were in profit, then it went against you, you should have exited with a loss, and the loss would hurt, but it wouldn't be a, $3 loss on a $10 stock. That's just ridiculous. So out of all these plays, they basically, I view them as the market had a nasty sell-off, and for the longs, the first 2 or 3 days, they would have worked. Then some of the stocks gave you clear signals to get out and to lighten up on the risk. And then if you didn't do that, if you didn't heed those signals and follow the warning signs, then you were probably stopped out with some small losses. So you could have been flat, you could have made a lot of money with these trades in the beginning, then maybe flipped and sold short, made a ton of money, or you could have just held on to it, not adapted to the price action. You could have been stubborn and just be one-sided in your view of which way the market was going, and you could have lost a lot of money. So it's all about the setups, it's all about the entries until the market starts to move and prices start to change, and it's about discipline, it's about changing your mind, just reading the market actively and all the time as the prices change, because the market doesn't care what you think. You gotta make sure you're reading the market correctly and trying to understand it as best as you can. So we did have, I remember, one short setup, and that was TOUR. And if you took a one long and one short approach, let's say you didn't heed the warning signals and you lost a lot of money on the long, well, you would have made a lot of money on the short. But if you played the longs as they were intended to be played, which short-term momentum trades, then you could have made money on the longs, and you also could have made money on the short right here. And this short worked out beautifully. I mean, along with the market, of course, that helped a lot. But we notified it right here at 17. Sorry, trend lines. All right, those trend lines a little messed up. There we go. So 17.10 broke a bearish flag, and we could have gone as it rallied into the 21. Weren't smart enough to do that, but then it just kept on falling back down to earth, and now it's at $15.74. So just red day after red day. If you bought some puts, you could have made significant profits on this trade. It may rally back into the 21, and then maybe you can short it again. I don't know. Right now, if I were in a position, if I had a position on, a short position, I can't right now, I'm not trading, I'm just giving you ideas and practicing for myself, I would definitely close out this position. I may have even closed out right here. I maybe wouldn't have been smart enough to write it down all the way to 15.34. I may have closed out around 16.38 just because of this doji where buyers bought it in the middle of the day, and it kept on going lower, and I would have been mad. But right now, if I held it and I held on to my winners, I would probably close out the position right now. It was only down 0.25% today, and the entire market was down, like for the S&Ps, was down 1%. So it's showing some relative strength when it showed relative weakness the past 2 weeks. So now on to the new setups that I have. The first one is CVTI, and this stock, this stock is just a monster. It went from 12 bucks almost to 19 and change in a matter of a few weeks, and now it's had a controlled pullback to the 21 period moving average. It's at all-time highs, I think. Yep, all-time highs. So if you believe in the story, or if you just want to have a short-term pullback trade, this would be a tactical, probably high probability place to enter a position for the uptrend to continue, which would bring it past the highs around 19. And I would put a stop loss below this day's low, probably around 17, 19, and that would also correspond with being below the 21 period moving average. So CVTI. Next is WNS, sort of the same thing. A controlled pullback to the 21. We had one right here. It rallied from 20 to 23. So if it can do that again, get above this 10 period moving average, maybe a 22, I would buy it and see if it can hopefully get past the prior highs right here, and that's some resistance. It looks like it wants to. It didn't get sold off that resistance pretty hard. It was a short, shallow pullback, as you can see, on pretty low volume right here. And if we can break through 22, and if you had some long-term options, long-term contracts, then you could hold, and it could keep on going on for a while. So definitely keep that on your radar. IG, another stock. As you can see, another 21 period moving average play. And I like these plays. It just makes sense to buy uptrending stocks in counter trend moves. You're not buying at the top. you're going with the trend when there's been a counter trend move, so pretty much you're buying weakness in a strong market. You're waiting for the weak hands to sell all their shares so you can buy them and then sell them at a higher price later. So this got sold off at 21 and rallied huge from $7 to almost $10, and now it's gone back to the 21 as well on very low volume. So it wasn't a sharp, vicious sell-off like you had in the overall market. It did go from $9.50 to $8, but that's just because of the volatility, just the nature of this stock. So if you want to add on a position there, this would be the best place to do it. Next we have TREE, Tree, same sort of setup. It's not exactly the 21, but it's a controlled pullback on low volume relative to the high volume up days. And it held the 21 on the previous two occasions. So given that history could repeat itself, the price could likely resume the uptrend. Then we have TAN. I especially like this name. You have this perfect coiling pattern right into the 21 on very low volume after, this is textbook stuff. So if it can break above the 60-minute chart, break above this upper trend line right here, it could go on for a while. It could go a lot higher, probably to the previous highs around 27, and if it continues the uptrend, 29, 30 is definitely in the cards. It held the 21 right here, so if it holds 21, it's coiling, which is a bullish consolidation pattern. It's not a steep sell-off after this huge run-up. It's just slow, methodical selling with some buying. This could be the place to assume some risk, make sure that your stop loss is below the 21, and you're risking probably 25 cents to make upwards of $3. I would take that trade any day. Another play that I have found is FLWS. This is 1-800-Flowers.com. I don't know about the fundamental story. Looks kind of shady to me, but all I can see is that the price action has been beautiful. You had this bullish flag pattern right here, rallied into sold off into the 10, and then, I'm bad with these new controls. Trading View is great though, but kind of hard with the trend lines. Going back to the chart, it broke above that bullish flag pattern and rallied from 734 to 862, and now it's doing the same type of controlled pullback to the 10-period moving average, creating a bullish flag. On the 60-minute chart, you can see if you want to assume some risk right here at the lower portion of that trend line, and if you want to sell it at 823, that'd be a good gain, or it can just keep on going and break through that trend line, be a breakout, and continue higher in this nice stair-stepping fashion. Next we have, ever heard of this company? It's called Apple, AAPL, and all my other stocks are kind of off the radar. That's not intentional. It's just because those are the stocks right now that are exhibiting relative strength compared to the market. There aren't many big cap stocks like Apple that are showing strength. Apple's pretty much the only one. And as you can see right here, it's in a coiling pattern. So it's pretty much building all this energy with low volatility. So it could either break up, which is my guess, which is I think that's what we'll do if the market doesn't get sold off too hard, or it could break out below, which would be bearish. But anyway, I feel like it'll be a strong move in either direction. So I just want to keep this on my radar just to see how it will perform over the coming weeks. AGIO, finally AGIO, this is the last long play that I'm looking at. This is forming this consolidation zone above the 10, above the 21. If it can catch a bid and maybe go to 64 above this trend line, or if you want to take on some added risk for some higher reward and buy if it comes back down to 59, 53, which is the lower portion of the 60-minute chart, then that could be a good place to enter for a nice ride, hopefully back to the previous highs after this nice big uptrend. Also, this consolidation zone, it's good to note it's on very low volume, which is what you want to see in consolidation patterns. Next, for the short side, we have GEF. And this stock, I'm going to brag a little bit here, but I saw this stock right here, rallied right into the 21, and I saw that all these other occasions it got sold off into the 21-period moving average. By the way, this is Grief Brothers Corporation. And that green bar could look imposing to some bears, but to me, I just thought that the trend will continue until proven otherwise. So it rallied hard above the 10 into the 21, and I saw it at 45. I didn't want to make a video then because I wanted to wait till the end of the week. But just letting you know, I think this would have been a great place to short, and lo and behold, it's gone down, broken that big bars, that bullish engulfing candles previous low around 43.52, and it's gone from 45.30 down to 43.38. So steep sell off in 2 days. Most likely, if I take away the volume here, you can see that better. It will continue the downtrend and may violate the previous lows around 42. So that's just a textbook pattern, in my opinion, for declining 21. As you can see, if I add the 200 pre-moving average below the 200, and just getting sold off right at that 21 period moving average, along with the rest of the market. 21 is very powerful. BDN, this is another stock that is just simply coming off support from this low right here at the 200. Now it's broken below the 200 and is rallying into the 21 for the first time on these weak candles. As you can see, very long wicks right here. Let me add the volume back. So I'm thinking that it may consolidate a little bit more, but most likely I think it'll take a turn lower, right, coming off of this 21 period moving average. Oh, this is interesting. Also, I don't know, I'm just saying, I don't think this would be a reason to short, but you kind of have this broken uptrend right here, and now it's coming back to retest. So let me get this one out. Yeah, so now it's coming back to retest that broken trend line. So if you're going short, that's maybe some added confidence to know that you have support and resistance in your favor along with the trend. Next up, Palladium. Not stocks, but I mean this would be a physically traded stock. You could do an ETF. And this rallied right back into its 200 period moving average, as you can see right here, on a low volume and the 21, and it got hammered 1.47%. So I think it could continue lower just like GEF and continue the downtrend past the prior lows. A few more stocks. ICFI, another stock. I mean, price action is everything. The 21 has just been a barrier for every single rally below this 21. And as you can see, this steep sell-off from 33 down to 30, 10% in a matter of a week. Excuse me. Had some Chipotle burritos for lunch, so I don't know. My stomach's kind of wild. Go back to the stock. Got sold off, and now it's rallied back in. This big long wick right here. That is very bearish. I mean, just picture that wick with a red bar, and that's pretty much an equivalent picture. So if you want to get short now and sell this rally, I don't think that would be an unwise decision. DST. This stock rallied into the 21, declining below the 200. The 200 is actually technically declining right now, which adds to the force of the trend. And it got sold off hard, down 2% today. So the momentum looks, and the path of least resistance and momentum looks to be headed downward toward 82, possibly toward new lows. And it also violated prior. The stock also broke down. I don't know why I keep on adding two trend lines to everything. Sorry about that. Violated previous support, broke above it, and now is broken down again. So I feel like this is a very promising short. SEM. This is not technically a 21 period moving average play, or selling a rally play, but a bear flag play. As you can see, it's also an inverted hammer, which is bearish. Below the 10, below the 21, below the 200. So if you were to short this, you would be trading in the direction of the big money in the trend. And on a 60-minute time frame, I mean, that is just a beautiful bearish flag consolidation pattern. As you can see, defined resistance, defined support. If you want to short below this, a break of the support around 1180, or a short at 1230 if it rallies back toward that, and then possibly cover at 1180 or wait for the actual bear flag to confirm and break down farther. That could make you a lot of money. So I'm watching that. This is SEM, Select Medical Holdings. Next, we have BMR, same sort of pattern. Rallied into the 21, below the 200. Recently broke below the 200, actually. And it bounced off support, so I'm thinking that I wouldn't want to sell it short right here. I'd probably want to wait for a break below this support right here, because there is support going back to April. Break below that support. And the 21 period moving average has acted as resistance, as you can see with these two wicks. So I think we will retest 1992, but it could rally off 1992. So I actually take back what I said before. If you want to short here, I wouldn't see that as a problem. Just make sure that you would put a stop above this 21 period moving average and get ready to take profits if it bounces off $20 a share. And as you can see that with a 60-minute chart right here, just to give you a nicer picture of the shorter time frame. And last but not least, well, maybe least actually, this is Plug, and it's coiling in a fashion after this big down move from $6 down to $4. It's coiling, it's consolidating below its 21 and below its 10 right now and below its 200. So the trend is down, low volume consolidation. It could break to the upside and then continue above the 200. Most likely, though, I think that it will go toward the downside, given the trend is down so far, short term. On a 60-minute time frame, you can see it's a pretty ugly consolidation. Nonetheless, it is consolidating this vicious down move. So I would short at a break of probably this prior low at 424 if none of the other plays work out. And then it may see a down move. I don't know. It could go down for probably down to 360. That's the next zone of support, in my opinion. So that play looks promising as well. Oh, and also going back to the S&P, I just forgot about this. One moment. Yeah, so now you can see the 200 period moving average. The S&P is also at its 200, so that's why I'm thinking maybe an oversold bounce tomorrow. I'm not really sure. It's at the 200. It's at support from this pivot low, as I said. Maybe a bounce off, rallying to the 21, and then finally a break. But this is probably the worst retracement we've had in a while, and that's in a year, given that we've broken the 21 period moving average, closed below it at the lows of the week, and we haven't done that in the past year and a half. So overall, there are long setups, there are short setups. It's just a matter of staying tactical, defining your risk. That's the most important rule. Going with the trend, and making sure that you pay attention to the markets. And just also, along with paying attention, I know two contradictory statements, but don't get too attached, don't get too focused and too crazy about each ticker symbol moving in a direction that goes against you or for you. Don't make the ticker symbol your life. It's okay if the stock moves against you. It's part of the game. Taking losses is a part of the business. Most people take more losses than profits on a stock basis, but they end up making money in the long run. So thanks for watching. Definitely make sure to check out the new Financial Bulls website. It's awesome, and Leaders Investment Club as well. And I'll see you in 2 weeks. Good luck trading.